Greetings and welcome to another episode of the Sovereign Lounge. We have your host here, Yamin Fauzi, and Round the World Man, to bring you more news, insights, and analysis from the world of investment migration. Today, we want to talk to you about the tax mess that the United Kingdom has become recently. There's been a lot of changes proposed this year in 2025, and in fact, some things are likely to take effect next year at the beginning of the 2026 tax year. Now, today, we have Yamin Fauzi here to bring some analysis into some of the strategies and techniques that you can implement as a UK business owner to cut down on your tax bill, say, starting in 2026. I mean, what are some of those topics and ideas that you have for review today?
All right, so the UK, I mean, I have many British friends and followers on X and other platforms where we regularly talk about how the UK has become an unlivable tax hellhole. You know, everything gets more, it gets more expensive. You pay more taxes. The weather is not so good. That's the most common, complaint in the UK. And on top of that you have to deal with the bad weather. You also have to pay lots of taxes. You know, it gets unlivable. You know, some people say maybe that's post-Brexit, maybe that's due to immigration. You know, there's many different factors that have led to this mess that the UK is in right now. And I mean, the data speaks for itself. Just going to show you real quick here about how many millionaires have left already the UK in 2024, you know, because the non-dom tax law has been abolished. Just to quickly explain, the non-dom tax law was a certain measure that has been centuries old by the UK or by the UK common law system, where you could take the UK as a base for taxation. You know, it's kind of like a flat fee that you pay annually, but you get exempted from anything else on taxes, be it offshore income, offshore dividends, etc. And this has been abolished after about 200 or even 300 years of existence, and this has ignited the exodus of millionaires in 2024 and also in 2025. So if you look at the even more recent data, this is from Henley and Partners now, the expected estimated wealth migration is 16,500 millionaires that will be leaving the UK in this year. That's more than the next 3 or even 4 countries combined, so China, India, South Korea, and Russia, which are usually very known for this sort of wealth exodus. So they are taking with them 91 billion US dollars in wealth with them, you know, that will not be taxed. So by the end of this year or in quarter 3 or 4, there will be budget talks, and they have to address this issue. You know, this wealth. How can we solve this gap? So this will be burdened again to the normal citizens of the UK. So perhaps even more increasing fees, taxes, etc. And it's kind of like it's a downward spiral, to be honest, for many people. And people are frustrated. We had recently a call with Jeremy, shout out to you, Jeremy, who is now living in Malaysia. And also, you know, is considering long-term planning when it comes to, living outside of the UK. What are the options, you know? And so today's episode, we are going to focus on what are options for UK citizens to live elsewhere. Basically. So that's what we're going to talk about.
Yeah, shout out to Jeremy. We appreciate the inspiration. The IMI article that you referenced, I believe, was published in January of 2025. So it's a few months old now, if I have the date correctly. There might have actually, there's been some other announcements, I think, even after that. But yeah, the data from Henley and Partners there, just pretty staggering. 91 billion in tax revenue. the other question is, of course, just kind of playing like both sides of this is like, what would the UK even do with all that tax revenue in the first place? I mean, who knows where that's going to go to, what kind of programs or what that would be accomplishing. But it's pretty staggering the difference there between 16,500 and then 7,800 there in China, in India even 3,500. So it's pretty impressive figures there. But yeah, what are some of the alternatives? What are some of the strategies that come to mind when you're talking about UK business owners that are looking for solutions?
Yeah, so many people. Well, one of the most common asked questions that I have usually from British like friends, acquaintances, colleagues, and clients is that where can I have a lower tax base? And also most of the people usually prefer some sort of English proficiency level, in the destination that they go to, or where it is easy, to adapt, or where there's enough services where you don't really need to learn an additional language, like for example Spanish, French, or I don't know, maybe Arabic or Chinese. It could be anything. So because they don't want to have this language barrier. So there's many different countries that come to mind, which I think are excellent for British people. Um, I'm gonna save the one of the best options for last. Chris will also have some insights there as well. And I mean, one of the choices, like for example with our friend Jeremy, who went to Malaysia. Malaysia is a very fascinating destination, very well when it comes to English proficiency level. It's basically everything is written in English because it used to be also a part of the British Empire. So there's this legacy there with that. And Malaysia has many options. There's options for retirees. There's options for digital nomads, for people who want to set up a tax-friendly business. For example, Lab One, or now family offices in Forest City, just next to Singapore. So Malaysia is one of these no-brainer options, which is I would say easy to integrate, and also have a very low tax burden, or there is potential for a very low tax burden if you structure it properly. The UAE, another example, very famous and very popular as of right now, especially among high net worth individuals who want to go there. So yeah, that's where they usually go to. So there's the golden visa. There is the you can set up and incorporate in the UAE as well, and also English is very talked a lot. In the UAE, it's very friendly for English speakers. Arabic is only people in the local population speak Arabic. Everything is written in Arabic as well, but also alongside English. Cyprus is another one that is where they effectively still have the non-dom policy, in where you can set up companies and profit from non-dom principle. And if you go more on the Western Hemisphere, there is Uruguay, also interesting for retirees because they have like a dual tax system where you can either live tax-free for the next 10 years, or you just pay like a reduced tax rate for the rest of your life, depending on how you want to structure it. You can choose by that. So if you are basically retired, you probably would go for the no tax fee for 10 years, and then you can still look whatever you want to go for. Bahamas also very interesting, especially for a bit more higher net worth individuals. You have the tropical vibes. You're just next to the United States as well, where you can just travel within 1 hour. Bahamas Nassau Airport has even a pre-clearance area where you can basically see it as an inland flight. Also entirely tax-free island, Bahamas, 0% taxes. Now, one of my favorite options also that I have many success stories as well is Paraguay. Paraguay is one of these territorial tax countries like Malaysia, where you pay 0% taxes on on any income that comes from outside. And Chris has a very interesting case study where it's very interesting for these British entrepreneurs or people who have still an LLP incorporated and still can benefit from all of this tax saving if they relocate to destinations like Paraguay.
Yeah. So thanks for that overview, Yamin. The Cyprus option is one of those that I wasn't expecting you to say, but it's actually really interesting. So let's talk more about the Paraguay option you just mentioned there a moment ago. Is there a scenario where if, let's say somebody's, a UK business owner, maybe there's additional business owners that are part of it, but let's just say they're at least one of two or three, but they become a personal tax resident in a place like Paraguay. And let's just assume now that this individual has been a tax resident of Paraguay for, say, like 2 years now. Given the current regulations in places like Paraguay or the UK, can you define any examples that, like any benefits? Like do we have like a kind of like an example that we can review?
Let's say you have a business operating in the UK with about 1 million pound of annual revenue. I mean, we can go for this example, and then also you pay yourself out a certain salary. The UK corporate tax rate is 25% for profits over 250,000 pounds of over 250,000 pounds. And there's also different dividend rates. So the thing here is that, the corporate taxes, that you cannot undo them, if you have a UK LLP as a UK citizen and living in Paraguay. So, especially if everything operates within the UK, it's, there's still the corporate tax rate that you have to pay. But as long as the profits are very low, and if you pay yourself an adequate salary, you can potentially save thousands, tens of thousands in tax savings, just because you have relocated to Paraguay. And you don't really need to spend most of the year even in Paraguay. If you are, for example, an international entrepreneur, you can spend part of the year there, which is absolutely recommended as well, because Paraguay has a lot to offer, not only from a tax perspective point, but also from a cultural point, from a up-and-coming society or up-and-coming vibes basically that is coming. And so, on the personal side, definitely you can basically reduce it to zero if you structure it properly. If you don't spend too much time in the UK, I always say, okay, well, if spend less than 3 months annually in the UK, then you're mostly on the safe side, and never more than 183 days. But again, I want to remind our viewers, this is not legal advice that we are giving here. It's educational, mostly for educational purposes, and also just for entertainment purposes, essentially. So, yeah.
Absolutely. Yes, the disclaimer is always welcome there. And I wanted to mention that there is also, I compiled this glossary of terms, and the substantial ties is another big thing. So I do think it's important, since we are speaking from an educational point of view here, the substantial ties to the UK or substantial ties to any place. You might be able, or you might need to demonstrate this at some point in time. And in my analysis that I drafted, I looked at somebody that's already been a personal tax resident of Paraguay for 2 years, but there is this transitionary period of time where you're kind of leaving the UK tax system as a business operating in the UK, generating profit there, and then also maybe you're a personal tax resident of the UK, they are going to notice in our £1 million example, they are going to notice that there's perhaps up to 74,000 pounds that they're not collecting. They're going to notice that. And so I do think it's important to recognize that it might not just be as simple as, show up into Asuncion, become a tax resident there through our trusted vetted partners, and then all of a sudden, all their worries are gone. It's not necessarily so simple. You might need to spend up to 120 days in Paraguay, but that's pretty easy to do if you want to avoid the northern hemisphere winter. Paraguay down in the southern hemisphere is a really attractive place there. You can also spend time in other places nearby, perhaps as well. Maybe you want to spend a little time in Brazil. But for substantial ties test, it might be good to spend at least 120 days in Paraguay your first year or two. After that, it depends what your personal goals are, but you're probably able to spend time somewhere else after that. Again, this is not professional legal advice. This is for educational purposes.
Absolutely, that's what I keep saying, that you have to have enough ties outside. You have to cut off as much ties as possible to the UK if that's what you're willing to do. And frankly, I mean, most people who complain about this, they're saying, okay, well, what else is there? Now that so many British people are fleeing basically the UK, from all of this, even authoritarian stuff, age verification. I mean, we could talk about authoritarian, but that's another rabbit hole topic that I'm gonna avoid for today. But anyway, it's many things are getting stricter or more controlled, or more in a controlled fashion, and people are unhappy about it. And if you see all your friends leaving, then you're naturally the next. You say, okay, well, if all my friends and family are leaving, why should I stay? Why should I be the dumb person, who pays a lot and gets little in return? And there's nothing wrong about to assess this reality for yourself. You say, okay, well, I'm working hundreds of hours, but I pay so much taxes, and the quality of life is just getting worse. And I think that's for anybody out there, not just for British person. I mean, this episode is specifically for British person, but for anybody. It's you don't have to sit it out. If you don't want, you have two legs where you can move, and you have a passport where you can move, and that's one of the realities. So I also want to talk about the most extreme step, which is the renunciation of the British citizenship, which some people are going to think about it, because the UK passport, it's one of the most powerful passports in the world. You have you can live in the UK and Ireland indefinitely. You have so much visa-free access. It's a very prestigious passport. But when we are looking a little bit in the future and see how it could go because of the trends that we have seen in the past couple of months and years, what if there is citizenship-based taxation, for example, like the United States has. The UK has the means to enforce such a thing, and naturally, how can you avoid this? And the ultimate thing is you can only avoid it if you renounce your British citizenship. And I have talked about this a lot, and I think for British people, the best and lowest cost option, to renounce, while not losing access to the UK, would be Nauru for them. I can show you a graph here with Nauru.
Yeah, let's take a look at that. So this would be like the extreme option.
Yes, yeah.
But yeah, I mean, it does seem like it could be a thing to consider, again, if they start moving more towards the citizenship-based taxation, which seems like some countries are already starting to implement.
Correct. Yeah. I mean, in the case of Nauru, it's one of these citizenship also that doesn't traditionally target, people who are looking for more visa-free access. The first successful application for Nauru citizenship was a German family based in the UAE. That tells a story about how this is all changing. Because they are also saying, okay, well, what happens in the future? What if we are getting taxed now in the UAE as a German citizen just solely because we have the German passport? So they want to have a plan B. I mean, if you can see now this graph here, this is the visa-free map for Nauru. You can see you can travel visa-free to the UK. You have the UK here. You have the British Isle, Gibraltar as well. You have the UAE, Singapore, Malaysia, Panama, and
I like Peru.
many
Peru's
countries.
over here, another Pacific
Peru
country.
also, yeah.
Amazing
Yeah.
food.
Yeah, Bahamas, Bermuda, and many other options. Also, as you can see, mainly from the British Commonwealth. From the Commonwealth of Nations countries, as you can see. So it's a decent travel document. If you want to renounce it. I mean, obviously you have to figure out other countries if that's what you want. But you can always look for options. I usually say couple it with a Latvia business or just store yourself. If you have maybe 250,000 euros, you can just store it in Latvia and you get visa-free access to the entire continent in Europe. So, or you invest in a business about 50,000, 60,000 euros in Latvia, and you get visa-free access and living and study rights in the EU. So this is also a post-Brexit solution at the end of the day as well. So, I mean, we're talking here about a very extreme case where you renounce the citizenship, and you're building some plan B here as well. But in my opinion, that would be a solution to go. If all else is not sufficient enough. And then you can also structure it with, foundations in, for example, Panama, for your legacy planning. So you also protect your assets for your future generations, so it doesn't get taxed for the ones who are still living in the UK are still British citizens, or not as much, at the end of the day. Again, it requires a lot of structuring here involved, and this is also just not legal advice here. But this is the general route that you could go for as a UK citizen.
Absolutely, yeah. Renouncing would be the kind of like extreme option there. So we just again want to clarify that for our viewers. But the most obvious thing right now to be proactive about what's happening in the UK for business owners is to, at the very least, become a personal tax resident elsewhere. It doesn't require you to change anything in your existing business structure. And that's the most beautiful thing there. In the analysis that I've gone through with Yamin, we've identified a scenario where just changing your personal tax residency to a place like Paraguay can yield a tremendous amount of actual tax savings that you can then pass through to something like a retirement fund, in the future or whatever, a trust or whatever, or you can just have that available for your everyday lifestyle. But that's the really key thing that we're trying to drive home here is taking advantage of these tax programs that exist that are not taxing you for revenue generated outside of a given country can be very beneficial for UK business owners. Please.
There is one thing that I want to mention here at the end of this episode, which is if you skip everything in this video, I just want to give you one thing that is like the TL too long didn't watch version for you guys. So let's say your tax bill is about 30,000 pounds per year. If you move to Paraguay and just live outside of the UK for most of the year, in 6 months of you have already made break even with the cost of setting up this structure. I'm just leaving this out there for you guys if you're interested. But again, this requires you to be an entrepreneur, digital nomad, and not employed in the UK. So then there is different scenarios and different things that need to be accounted. But if you're one of these people, then definitely after 6 months you have already broken even if your tax bill is £30,000 or more per year.
Absolutely fantastic summary there. The too long didn't watch. I love it. Well, Yamin, I think that's about all we have for this episode recording today. Any final thoughts?
I think, well, yeah, again, like I want to say that you're free to go. You don't have to fight this battle, and think that you must pay taxes just because everybody else does it. No, you don't have to. You're free to go, and you should take advantage of this.
Absolutely. Well, thanks again, Yamin, for another fantastic recording of the Sovereign Lounge today. We'll catch everybody next time. Thank you very much.
See you next time.